Imagine this for a second. It's deposit day. You've planned your bills. You know exactly what needs to be paid. You open your bank app, expecting your Social Security money to be there like it always is. But it's not. No deposit, no alert, no explanation. Just empty space where your payment should be. For millions of Americans, especially seniors who rely on Social Security to cover basic living expenses, this isn't some wild rumor or fear-based headline. This is something that can actually happen because of new banking rules that most people don't even know exist yet. And if you're not prepared, those rules could delay or disrupt your payments without warning. Before we get into the details, take a quick second to like this video and subscribe to the channel. It helps more people stay informed about changes that directly affect their money, their security, and their peace of mind. Now let's be clear from the start. Social Security benefits are not being cancelled. The government is not ending payments. But what is changing is how banks handle accounts that receive government deposits. Banks are under more pressure than ever to monitor accounts, prevent fraud, and verify identities. These changes are happening quietly, behind the scenes, and they can impact when your Social Security money arrives, or whether you can access it immediately. For years, Social Security deposits have felt automatic. Same schedule, same account, no problems. That consistency builds trust. But banks don't operate the same way they did even 5 years ago. New federal regulations require them to review accounts more aggressively, especially accounts that receive regular government payments. Seniors are often affected the most, not because they've done anything wrong, but because their accounts fit certain risk patterns banks are trained to watch closely. One of the biggest issues is identity verification. Banks now require customer information to be perfectly up to date. Your full legal name, address, date of birth, and identification must match exactly. If your bank has an old address, a nickname instead of your full name, or outdated documents, the system may flag your account. When that happens, deposits can be delayed while the bank investigates. In some cases, the payment is sent back to the government, which can take weeks to resolve. Another common problem involves inactive or low-activity accounts. If you don't use your account often, don't make regular withdrawals, or rarely log in, banks may classify it as inactive. This is very common among seniors who prefer cash, paper statements, or minimal banking. Unfortunately, inactivity can trigger fraud prevention reviews, and during those reviews, incoming Social Security deposits may be temporarily blocked. Joint accounts are another area where issues can arise. If your Social Security is deposited into an account shared with a spouse, adult child, or caregiver, the bank looks at the activity of everyone on that account. If the other person has overdrafts, legal problems, debt collections, or suspicious transactions, the entire account can be flagged. Even though Social Security benefits are legally protected, access to those funds can still be delayed while the bank sorts things out. Fraud prevention is a major reason these rules are tightening. Scammers are aggressively targeting seniors, and banks are trying to stop fraud before it happens. But sometimes that protection causes problems. A sudden large withdrawal, a new transfer, or even changing your usual banking routine can trigger a freeze. When that happens, everything pauses, including your deposits. What makes this situation especially frustrating is the lack of clear communication. Many people don't get a phone call. Some don't notice a letter in the mail. Others assume a bank email is just another promotion and ignore it. Then deposit day comes, and the money isn't there. At that point, fixing the issue can involve long hold times, paperwork, and in-person visits, all while bills are still due. So what can you do to protect yourself? First, review your bank information carefully. Make sure your name matches your Social Security records exactly. If you've moved, update your address with both your bank and the Social Security Administration. Even small mismatches can cause delays. Second, keep your account active. Use it regularly. Make small transactions, check your balance, or log in online. This helps prevent your account from being labeled inactive or high risk. Third, be cautious with changes. Switching banks, changing account numbers, or adding someone to your account can all trigger reviews. If you plan to make changes, confirm everything with Social Security and your bank ahead of time and expect possible delays. Fourth, pay attention to messages from your bank. Letters, emails, or app notifications may include requests for verification. Ignoring them can result in restrictions you didn't see coming. Finally, monitor your deposits closely. Don't assume everything is fine just because it always has been. If your payment is late, contact your bank immediately, then follow up with Social Security if needed. Acting quickly can make a big difference. These new banking rules aren't meant to scare you, but ignoring them can create real problems. A little preparation now can help you avoid stress, missed bills, and unnecessary delays later. If you've ever experienced a delayed deposit, a frozen account, or unexpected banking issues, share your experience in the comments. Your story might help someone else avoid the same situation. And if you think this information could help a friend, parent, or neighbor who depends on Social Security, share this video with them. Staying informed is one of the strongest ways to protect your financial future.